Rodney Phipps is the CEO and one of the founders of WealthShare, a private REIT. He's here to share with you what are the opportunities in Alberta within a real estate investment trust. Rodney, thanks for joining me and thanks for sharing some insights that you're going to share here.
Yes, thanks very much for having me. First, real quick, I know you're used to dealing with my much better half, Natasha Phipps, who is actually the CEO. I am the COO. I report directly to her. So I will give her that nod. And thank you very much for having us here. Before we get started, I'll just do my quick due diligence. This is for education purposes only. It's not to solicit any sale. If you want to see more about our disclaimer, please go to wellshare.ca. There's all the information there. Now that that's out of the way, thanks again for having me.
Well, that's perfect. So when we talk about a real estate investment trust, a REIT, we look at the opportunities that it presents. And, what I'd like you to talk about, first off, why don't we start with this? What was WealthShare? What was the kind of intention behind forming this real estate investment trust, Rodney?
That's a great question, and it's one of the things that we're very proud of. WealthShare was really an evolution of the co-founders' investment history in real estate. So Natasha, the head of our company, had found a multifamily residential property in Calgary, and that was sort of the impetus for us opening this trust. As we started going down the path of pursuing this and speaking to our investors, we realized a lot of our investors wanted to use registered funds. And in order for us to do that with buy and hold real estate, we realized that the trust was the best avenue for that. So this was designed by investors for investors. It was really taken with that the intention of being able to provide this larger sort of institutional size asset to the average investor. And it was the evolution of our careers and experiences investing in real estate.
Fantastic. Now, as the CEO of the Real Estate Investment Network, we really are proud of surrounding ourselves with great trusted partners. Natasha Phipps, who is also Phipps Real Estate, has been a part of the REIT community for multiple years. So I was really excited to hear when you and she launched WealthShare because it really opened up doors of opportunity. Now, like you and Natasha, I'm a huge fan of what's going on in Alberta and has been going on for many years. And when we look into the future, the opportunities, but not everybody can get into the real estate market as an investor in the traditional way of going and a big down payment and qualifying for a mortgage. Yet we want to put our capital to work in real estate. And this really does open up the opportunity for investors to do that. Number one, you kind of laid it on the line, registered funds. I mean, gosh, if you can take some of your RSP and put it into a REIT, a real estate investment trust like WealthShare, it opens up the door of opportunity to actually engage in the real estate market in Alberta and use your registered funds. Now, that's one part of it, but I know that there's other segments or other pillars, if you will, of what WealthShare provides for its investors. Why don't you walk us through some of the other benefits or some of the other pillars that you would suggest to real estate investors to consider?
Yeah, absolutely. The first one, and one of the most exciting, is the ability for people to get involved in investing in real estate earlier without needing to qualify and with a lower minimum. So our minimum is $5,000. That allows us to really be able to be a part of people's investing history and experience. We've always sort of seen that real estate investing can often be seen as this thing you have to build up towards or wait for or save for. And it's harder and harder to do that in today's economy, as you know. So we were really excited about being able to offer this lower minimum, get people investing in real estate, and have it as part of their portfolio much earlier in their investing career.
So there's a part of this which is so great that we don't want to step over. Again, Natasha Phipps and her team have been part of the Alberta real estate market for many years. What this did was open up the opportunity in real trying times when you look at what you need to get into that market in Alberta, number one. Number two, given what's going on with interest rates, the uncertainty of the economy, this really is about also mitigating risk and giving you the opportunity, giving investors the opportunity to get engaged again in that market without having to qualify for a mortgage, being able to use registered funds, not having to come up with 100,000 or 75,000 or $200,000 to actually have capital that they would tie up directly to qualify for that down payment on one unit. Now, within the trust, you've got, and Natasha comes from she's got a ton of experience in real estate, and particularly in the Alberta market, but really right across the country.
Yeah.
So when you look at what that trust invests in, what kind of assets are you putting into that REIT, Rodney?
Yeah, and that's exactly one of the strengths of our trust. There is we're investing in Alberta. Natasha, as you say, has a lot of experience, a huge network, and so she's able to find these deals for us. And what those deals are is multifamily residential. That's what we're about. We're doing the buy and hold, slow and steady. We're trying to minimize as many of the variables as possible. We're not trying to reinvent the wheel. We're just trying to access the best possible deals we can, lend our management experience. Where we're getting our value add is just by making sure that these opportunities that we acquire are operating at the maximum efficiency, so that we're getting the absolute most out of our finances and refinances. It's in our backyard, but also we know Alberta's got great tenancy laws. It has the best balance of all the variables out there, which is one less variable on the scale. So that's what it is: multifamily residential, slow and steady buy and hold, the boring part of your portfolio, if you will.
What I love about WealthShare and the relationship that we built over the years with Natasha and the team and the Phipps real estate side of it is the fact that Natasha and myself and our team, we certainly, and of course yourself, her team, but we share common values. And one of those values that we share is that we make decisions that are based on the economic data. And Natasha, like me, we exchange information all the time in terms of what's going on economically so that we make great decisions. So when we look into the future of what's happening in real estate today, we know that multifamily is in fact right now and for the foreseeable future something that is going to be necessary and needed. Rents will continue to go up, net operating income can be improved, and you guys have the whole structure to do that. And a lot of that's got to do with the fact that Alberta economically is so strong and immigration is so high that we start to see the demand continue to increase for the multifamily space. So you're doing, and your team is doing, great diligence. It's based on data, not emotion. It's very
Exactly.
pragmatic. It's proven in terms of what the research proves to us in terms of demand for that product and those products. What else do you want to share about that trust that investors need to know?
Well, one of the things that we obviously pride ourselves on is being also the passive part of someone's investment experience. I think Rain does a fantastic job of communicating both the active and passive sides, and really taking a look at your whole portfolio. What is your uh, goal? What are you getting into this space for? Why are you doing it? And we believe in the active side of it. It's very important, and that can change. You need to be, able to pivot and sort of take advantage of the markets and the opportunities in front of you, and those goals can change. For this passive investment, that's what you're trusting a team of professionals like us to be able to handle it, so that you are able to maximize your time pursuing the more active ventures that you have, whether it's your career or your own real estate investing portfolio. So being this passive opportunity that's on the side of your portfolio maximizes your exposure to the market and maximizes your ability to invest while not taking away from your day-to-day activity. And like you said, we analyze things very conservatively. We always run worst case scenario. Like I said before, we're trying to remove as many of the variables as possible, take advantage of the market we're in, and that's what people are investing in when they take a look at WellShare.
What I love about really a REIT, and in this case, the WellShare, and what you guys have created is that, this phase of my kind of life, if you will, I'm the OG, I'm that 65 plus, but I
Yeah,
still believe strongly in real estate. And I have a portfolio of real estate that's quite, involved. I have property management, it's detached and light industrial. So it's very active in what I'm doing. And that's all to say that I'm kind of done in that phase of my life. I
yeah.
actually want to be able to take some of that off the table and then keep it in real estate, but not be involved day to day or on a regular basis to manage that particular asset. What I love about this is that in depending on what phase of your life you are, you can have a little bit of active, a little bit of passive, or you can be totally passive in investing in a REIT such as this. So when you're doing your diligence, you're looking at Alberta, you're seeing a strong economy, you're seeing WellShare as a very strong infrastructure and business slash operating company that's going to handle all those things for you. You literally get to put your capital to work in real estate and not have to worry about it. And I love that, especially for me, where I'm at, that was really appealing, given that I can diversify a little bit and have both being in the trenches and engaged. And then on the other side of it, sitting back, letting WellShare handle all of those kind of details. And I love that aspect of it. What else you got in Rod? And when it comes to WellShare, what else have you got to share about it?
I would say that how we approach the market and what we're trying to make return wise, we're still a fairly new venture. So at this point, we're in a fairly heavy acquisition phase. The bonus to that is that our growth projectile is fairly positive. The cash flow aspect will come closer to year 5 once we hit a refinance cycle. But the flip side of that is that the net asset value of this portfolio has a good opportunity to grow. We target 12% return. As I said, we always run worst case scenario when we're analyzing a property. If it doesn't hit that 12 on a worst case, we move on to the next one. We're not trying to, we always go on that worst case, but we target a 12% return. And on top of that, we ensure that there's an 8% preferred return to our investors. So after 8%, then we start sharing in the reward. And that, I believe, is a good example of how we're motivated to ensure that we're hitting those numbers and we're hitting those returns, while at the same time being as conservative in our analysis and long-term in our projection. So it's the best of both worlds is what we're hoping to do here.
I love that. And as I shared earlier, we share common values. And one of those common values that we share is that we're conservative in our approach. We're not always swinging for the fence. If I've learned nothing over the past 25 years of being a real estate investor, it's better not to swing for the fence. If you occasionally get one, that's awesome. Otherwise, doubles, singles all day long. If you get a triple, awesome. And then every so often you get that home run. But if you're always just being conservative, being okay with gradual and I guess pragmatic growth, it's a very, very strong approach. It's conservative, but then again, that's what fits most people's kind of way of thinking and their portfolio if they've got a long-term outlook in growing that wealth, investing in real estate.
Absolutely.
Folks, what you want to do, reach out to Rodney and his team at WellShare, and they're going to get you looked after. Ask any questions that you may have. They're there to answer those questions, walk you through the process, and make you feel and have you understand so that you can make an educated decision. Rodney, I'll leave the last words for you. Anything else you'd like to share about your WellShare REIT?
Just to sort of tail what you're saying there, we believe that WellShare should be a part of an investing portfolio. We know we're a conservative side, but I believe by investing conservatively with a portion of your portfolio, it allows you to be a little bit more aggressive with other portions of your portfolio. We really believe in being a part of that. I'm with you. It's the home run swing, while it's fun, is not why people get into real estate investing. We're here to be the secured asset. You want the wild stuff, there's places for it, and that's great. But we're here to be the backbone of someone's portfolio and allow them to take a smaller portion of their portfolio, ideally, and then maybe take some more aggressive risks. So
I love that.
Is what we're looking to do.
Yeah, I love that. And it kind of goes back to that cliche: slow and steady wins the race.
Every time.
And slow and steady gives you amazing returns on your investment in real estate. Rodney Phipps, thanks so much for sharing these insights about WellShare. Folks, reach out, get some more information, consider WellShare.
Thanks for having me.